Hey guys, welcome to another Damilola Forex Academy video. Today, I'm going to be talking about a very important subject, which is how to actually analyze the Forex market. It's important that everyone has the right knowledge and also knows the right application of this knowledge. So I decided to make a video on how to actually analyze the Forex market. This is a very important video, and I want you to grab your paper, grab your book, and write down every single thing I'm going to be talking about here, as the proper application of this knowledge, which I'm going to be sharing out right now, is going to completely shape your trading for the better. And if you practice these things I'm going to be talking about, I assure you that you are going to see a very positive result. So let's go, guys. In analyzing the Forex markets, there are some key criteria that has to be in place even before you pick the trade, which are listed below. One, you need to have an entry strategy. It's important that before picking a trade, you need to have an entry strategy. Okay, what confirmation met before or have to meet before picking this particular trade. And you need to be consistent with whatever entry strategy that you are going to be working with. In today's video, I'm going to be teaching you the strategy that has worked for me over the years, and I'm going to be teaching you every single thing from the entry strategy, the exit, and the trade management of that particular strategy. Okay, so for my entry strategy, the first thing I do is what? I make sure that when I want to enter a trade, I make sure that I have a reversal zone and I make sure that I have an extension zone. Let me go ahead and write that out. I make sure I have a reversal zone, and I also make sure I have an extension zone. Okay, so what does the reversal zone tell me? The reversal zone tells me where prices are likely to reverse. It's important to note that I'm a reversal trader. That is, I only trade the market when it's reversed. Okay, when the market gives me an opportunity to trade a reversal, that's the only time I get into the market, and I don't trade the continuation of prices. If price is making a continuation move, I let the market go, and I only trade the market when it reverses. Okay, so with my entry strategy, I make sure that I have a reversal zone. That is a zone where price is likely to reverse. These can be zones of support and also zones of resistance. I look for a particular zone, and if I see that, okay, there's been multiple support, or this looks like a strong support zone, I could identify it out as a reversal zone. I also look at the resistance zones. I would, okay, if there's been multiple resistances here, or if this looks like a strong resistance zone, I'll identify it out. A Fibonacci zone can also be a good reversal zone, and a counter trend line can also be a good reversal zone. So all of these are important, and like I said, write down every single thing I'm going to be talking about in this video. Okay, for an extension zone is the zone that shows me where I am supposed to take my profits on this particular trade. Remember that an entry is also as important as an exit. So if you have a reversal zone, it's also important to have an extension zone. An extension zone tells me where to exit prices. Okay, so before I enter a trade, that's why it's listed under the entry strategy. This is because before I enter a trade, I make sure I have a reversal zone, and I also make sure I have an extension zone. A reversal zone shows me where price is likely to reverse, which will give me an entry because I only trade reversals. And an extension zone shows me where price is likely to end that particular movement, which shows me where to exit prices. Okay, so that's the first thing under the entry strategy. I look for a reversal zone, and I also look for an extension zone. Next, it's also important that before I enter a trade, I must see a change of structure. This is very, very important. I must see a change of structure. Before I enter any trade, I must see that a bearish trade a bearish structure has been violated or a bullish structure has been violated. For example, let me draw it out for you. For example, if price is moving on a bearish structure of lower highs and lower lows like this, I make sure that what before I enter a buy trade, a bearish structure has been violated. Right now, you can see that what price has created an higher high right here. Price has created an higher high right here, violating the lower high. Okay, so before I enter a buy or a sell, I make sure that what the initial structure was violated. This is also the same on the bullish side. If price is moving on the bullish side, I make sure that what this bullish structure is violated. At a violation of this structure is what is going to give me my entry point. So if I'm going to sell, I make sure that what there's a violation of a lower high. If I'm going to buy, I make sure that there's a violation of a lower high. And if I'm going to sell, I make sure that there's a violation of an higher low. Okay, so I need to see what a change of structure, and change of structure is the strongest entry confirmation that anybody can use, because the market moves in structures. Okay, and if the market moves in structures, this would mean that a change of structure will let you know that okay, this particular bullish structure is done and the bears are in, or this particular bearish structure is done and the bulls are in. So a change of structure is the most reliable entry confirmation that any trader needs, and a change of structure is what I rely on to enter or pick a position on a particular trade. Okay, so that aside, the next thing is what that is what it is for the entry strategy. Okay, for the exit strategy, for me to exit my trade, I need to make sure that what like we mentioned in the beginning, we need to have an extension zone. So my exit strategy, I'm going to be listing out my extension zone right here again in the exit strategy. Extension zone. That is, I need to have a zone where price is likely to end that particular movement. For example, if there's a violation of the bearish structure, I need to know that what, okay, if I'm buying at this point, this is where it is going to exit. For example, let me show you what I mean by my extension zone. Okay, so if this is the bearish structure, and right here we've seen a violation of the bearish structure. Okay, right here I'm going to buy here, put my stop loss at the low. I could take profit at the 61.8 of this movement if I'm not in the overall direction of the trend, or I could take profit at the 100.0 right here if I'm in the overall direction of the trend, which is the same here also. Push, exhaustion, push, exhaustion, push, exhaustion, push. Okay, this is clearly a bullish structure. There's a violation of this bullish structure right here. I know that what, okay, I'm going to sell right here, put my stop loss above the previous high, and I could take profit at the 61.8 if I'm not in the direction of the trend, or I could take profit at the 100.0 if I'm in the direction of the overall trend. Okay, so this is what I mean by my extension zones. Okay, so my extension zones are needed for me to be able to pick or take profits. Okay, so my exit strategy also includes what the Fibonacci. The Fibonacci is also a very important tool that I use to take my profits, which is what I just mentioned right now, that for me to take a profit, one, I could take profit at the 61.8 of the Fibonacci, or I could take profit at the 100.0 of the Fibonacci, which if price is moving like this on bearish structures, price is moving like this on bearish structure, and I'm buying right here at the break of the lower high, I know that what I could buy to the 61.8 of the Fibonacci, or I could buy to the 100.0 of the Fibonacci. So the Fibonacci is a very important exit criteria for me. Okay, so that aside, the next thing we're going to be talking about is the trade management strategy. Okay, how do I manage my trade? Whenever I pick these trades, how do I manage it? Okay, I manage my trade by putting my stop loss at the previous low or previous high. For example, if it is a bullish structure, something like this, the price is moving on a bullish structure of higher highs and higher lows like this. For me to manage my trade, my stop loss, initially, of course, entering the trade, if I'm entering the trade at the break right here, my stop loss will be here. Then I'm going to be putting my stop loss above the previous lows. Sorry, below the previous higher low. Okay, below this low, below this low, below this low, below this low is where my stop loss is going to be if I'm riding a bullish structure. Okay, and if I'm riding a bearish structure, my stop loss is going to be above the previous high. Okay, my stop losses are going to be above the previous high. Okay, so it's important to note that when I manage my trade, I put my stop loss behind the lows or above the highs. Okay, trade management strategy. Stop loss is put behind the lows, and stop loss is also put above the highs. Stop loss is also put above the highs. So like I said, if I'm riding a bullish structure, I put my stop loss behind the lows. Okay, this is a bullish structure right here. If I'm riding a bullish structure, my stop loss is going to be behind the lows. So I'm going to trail it behind the lows. Once prices makes an higher low, pushes up and makes an higher high, I'll adjust my stop loss behind the low. Once price pushes up again, make an higher high, comes back, higher low, push up again, I put my stop loss behind the low. And that is how I also do it for the bearish structure. Okay, if it's a bearish structure, I put my stop loss behind the above the high. The prices comes back, makes a lower high again, breaks, makes a lower low, I put it behind the high. Prices goes up, makes a lower high, I put it behind the high again. And that is how I keep managing my trade. Okay, so like I was saying, it's important that before you enter any trade at all, you need to have your entry strategy in play, you need to have your exit strategy in play, and you need to have your trade management strategy in play. Okay, and it's important that you follow these strategies religiously, as this will make or break you as a trader. Okay, so it's important, and just like I taught you guys, I'm teaching you my own strategy that has worked for me over the years. It's very, very profitable, and I assure you that if you apply this particular strategy religiously, you are going to be profitable. I assure you 100%. If you apply this, you are going to be profitable without any doubts, because this is proven beyond. This is 100% proven that it works, and you are going to surely see a very positive impact in your trading. So let's go over to the chart and let me show you real life examples of what we do and how I'm able to apply all of this into management of my trades and into picking a high probability trade. When analyzing on the real charts, I like to focus on the real-time information that market is giving me. I don't like to bulk myself with too much of information from the past, but instead focus on the real-time structure that market is currently trading at, even though I start from the monthly time frame down to the 30-minute time frame. On the monthly time frame, I still focus on the particular structure that price is trading at and trade using that information. Okay, so this is the monthly time frame, and clearly we can see prices on a bullish structure right here of higher highs and higher lows. Let's go ahead and identify this structure out. So I'm going to pick price from the low right here, so we can see prices make a push, exhaustion, push, exhaustion, push. So clearly we know that what price is on higher highs and higher lows. Okay, this is a low, this is a high, this is an higher low, higher high, higher low, and higher high. So clearly we know that what price is on a bullish structure of higher highs and higher lows. Okay, so this is the first information that is needed. That what, okay, monthly, we know that what prices is on a bullish structure of higher highs and higher lows. Okay, so the next thing we are going to do is what? We are going to jump down to the weekly time frame, and we are going to also check if the monthly and the weekly are corresponding, giving us similar information. Okay, so On the weekly time frame, we are seeing the same thing also. We can see prices make a push, exhaustion, push, exhaustion, push. Okay, this is the same monthly structure that is just broken down on the weekly. Okay, so we are going to streamline the structure right now. We're going to zoom in, streamline the structure, and look at what the last push that was made. Remember, we are trading a push, exhaustion, push, exhaustion, push right here. Okay, so I'm going to be looking at the big push from here to here for my trade opportunity, because all of these informations, the information right here and the information right here are a little bit in the past. So I'm going to be looking for a trade opportunity using the information from the bottom right here to the top right here. Okay, and remember that I'm a reversal trader. What does this mean? This means that what? If I see a violation of the structure here to here, I'm going to sell to the 61.8, since we are not in the overall direction of the trend, knowing fully well that what overall prices is bullish. Okay, but that aside, let's go back again and zoom in and see the weekly structure itself that is moving. Okay, here we can see prices move on what? Push, exhaustion, prices made another push right here, exhaustion, and push right now. Okay, push meaning that what? Prices broke the last high. Okay, this is the last high. So this is push, exhaustion, push to this particular level. We can see prices come for an exhaustion right here and make the push right there. So even on the weekly, price is currently on a bullish structure of higher highs and higher lows. Okay, so this is the low, this is higher low, this is the higher low, this is the high, this is the higher high, and right now price is currently making another higher high. Okay, so this is clear right now that both on the monthly and on the weekly structures, price is currently bullish. Okay, so we are going to collapse prices down to the daily and look for a real-time trading opportunity. Remember that even though price is bullish on the monthly and on the weekly, on the smaller time frames like the daily, we can still see a small real-time opportunity of both sell and buy, okay, depending on what prices gives us. Okay, so right now on the daily, we are going to streamline what we want to trade again, and we are going to streamline it to the last low right here to the last high that prices made right here. Okay, so that we are going to get a real-time trade opportunity. Okay, so let's go down to the daily and look at that. So on the daily, we saw prices make the same weekly structure in which we just talked about that we're going to streamline. It's this one right here where prices made a push, exhaustion, push right now, and right now since price is making another exhaustion. Okay, so let's go ahead and identify some of the sensitive zones that we can see right here, which are also reversal zones that I talked about. Okay, so this resistance right here is a reversal zone. Why? Because you can see that prices have reacted in this zone multiple times. Apart from prices making a resistance here once, prices made a resistance here once at this point, prices came back again, made another resistance here again, and right here we can see prices make a support, and support here. So this is a zone that can reject prices and even send prices to the top. So it's important that we watch out for this zone. Okay, another zone that we are going to bring out again will be the Fibonacci from the low, from this low to the high. Okay, we can see the 61.8. We're going to bring out our horizontal trend line and put our horizontal line at the 61.8. Okay, so these are the reversal zones that have been identified. Okay, so what do we do? What we do next is what? We identify our extension zones. Okay, so let's go to the 4 hours. We're going to be back to the daily, but just to see a clear picture of our extension zone. Our extension zone will include the high that brought prices down to our reversal zone. That is this high. Okay, this is our extension zone. And we could also see this daily extension zone right here. That is the highest point of the daily. Okay, these are also important extension zones also. Okay, so we'll go back and we'll identify it out. This is also an extension zone. Okay, so now that this has been identified, what do we do? Okay, right now we can see that price is currently trading around a particular zone right here, which is a potential reversal zone. Okay, and this zone would send prices to our first extension zone and would also send prices to our last extension zone. Okay, but what are the criteria for us to be able to see that prices will get to these particular zones? Okay, so but that aside, we also identified this 61.8 as a potential reversal zone also. Okay, this is a potential reversal zone. Remember that overall we are bullish with prices. So we know that what, okay, whenever we have a direction of prices, we know that what, okay, since we are bullish, then on the buy side we'll be looking for an extension, and what on the sell side we'll just be looking for reversal zones. Okay, so right now, what are we going to do with prices? The simple thing we'll go down to this what? We'll go to the smaller time frames, the 4 hours to 1 hour, and we know that, okay, price is currently trading at a reversal zone. So what do? We go there and we look for a change of structure. It's that simple. And remember that what, we are overall bullish. So whenever we are bullish, what do we do? We buy to the 100.0, except if there's a counter trend line that seems strong and is reversing prices, then we buy to the counter trend line. Okay, so let's go down to the 1 hour time frame to identify the structure. Remember that what prices is trading, we can see a rejection that price is trading around the reversal zone, which is this reversal zone right here. Okay, so what do? We identify the structure from the extension zone that brought the prices down to our reversal zone. So we can see prices make a push right here, exhaustion, push right here, exhaustion, prices make another push to our reversal zone and making this our last high. Okay, so when am I going to buy prices? I'm going to buy when prices goes ahead and breaks this high, just like we've talked about in our explanation. So I'm going to buy here. I'll put my stop loss at the low and I'll buy to the extension zone here at 100.0. Okay, because this is the particular structure that was violated. So as soon as what? Okay, remember that price started at by moving. This is exactly what happened. Let me draw it out here. Push exhaustion, price made a push. As soon as what? This lower high is violated, it means that what, all of this bearish structure that brought prices down, same fractals, is now, all of that structure is violated, and I can be able to buy back to the 100.0. Okay, so that is what is happening right here. Price can also do something like this: push exhaustion, push exhaustion, push. Price can also come here, make another exhaustion, and come to this zone, make a double pressure, and what, give us a buy at a violation of this high right here. Either ways, as once the last lower high is broken, it has given us a buy opportunity. Okay, and we're going to buy, put our stop loss at the low, and we know that what, overall from the monthly down to even the 1 hour time frame, we know that overall we are bullish with prices. So we know that what, we are going to go and buy to 100.0 or buy to a counter trend line. Okay, for example, right here we can see a counter trend line that has been rejecting prices. Okay, so this counter trend line is important, and instead of buying to 100.0 right here, since I've seen a counter trend line that has rejected prices 1, 2, 3 times, instead I'm going to buy to the counter trend line right here. So it's quite simple and very straightforward. Okay, so let's go ahead again and start. Remember that we saw prices moving on what? This is the daily time frame again, push exhaustion. Then we saw prices make a push, and we saw prices make an exhaustion to this reversal zone right here. Okay, so at this reversal zone, if we see a change of structure right here, okay, that is the structure that sends prices. Then if we see a change of structure, we know that what, we are going to buy to this high right here, and if prices breaks this high, we know that what, we are going to come to this high. Okay, so let me show you when price will be valid, and we are going to buy prices to this topmost high right here. Okay, let's read the structure together. This is what, push exhaustion. Prices came for a double pressure right here. They came again, created a lower high, created a lower low right here. Okay, so as soon as prices comes and violates this bigger structure by creating an higher high, this will be a valid buy entry point. But it's not going to be a trade I'll get in, because it's not a risk reward. But as soon as what, prices violates this last high, it will be a good buy entry, and we can be able to buy to this resistance right here. But it's not going to give me a very good risk reward, so it's not going to be a trade I'm going to venture into. The only time I'm going to venture into this trade is if prices breaks, it comes back and gives me an higher low. Okay, as soon as I see an higher low and I see prices breaking the structure, I could be able to get an early entry right here at a rejection of 61.8 and buy to this resistance here while putting my stop loss at the low. Okay, so it's very, very simple. But right now, what is the real-time trade opportunity for us? Price is currently reacting at a reversal zone, and this is the extension zone right here. Okay, so what do? We'll go to as much as even the 30 minutes time frame, which I sometimes use to pick my entry. And what do? We read the structure. Okay, so this is the structure right here. We saw prices make a push, exhaustion right here, make a push, make an exhaustion. Then we saw prices make a push to reversal zone. As soon as what prices violates this last low, it's going to be a good entry for us. Okay, our price could decide, like I said, to come to this point, make another lower high right here, come to this point for a double pressure and come. As soon as I see prices break this high, it's going to be a good buy entry, put the stop loss at the low and buy to 100.0 since we are in the direction of the trend. Also, let me show you some brief examples of how we traded right here. These are the previous two opportunities that market gave us. Okay, so here we saw price was at this particular zone right here. So we saw prices make a push, exhaustion, push down to our reversal zone. Prices came back to create a lower high, and prices came back to this point right here for a double pressure. As soon as we saw a validation of this structure right here, it was a good buy entry for us. We put the stop loss at the low, and we were able to buy this time around. Price did not get to the 100.0, so we bought to the counter trend line. Okay, there was a counter trend line rejection right here. We can see touch 1, touch 2, touch 3. So this time around, we only bought to the counter trend line. This was it. Push, exhaustion, push, exhaustion. Price came for a double pressure right here and broke the structure right here, broke the last high right here. We bought right here, put our stop loss at the low, and put our stop loss at the low, then bought to the counter trend line right here. As soon as prices touch the counter trend line, we hit very big profits on this trade and we closed our profits there. Okay, so we also had another opportunity again right here when prices fell back to our reversal zone after rejecting the counter trend line, making us push, exhaustion, push, exhaustion, push, exhaustion. Prices came to our reversal zone right here and violated the structure at this point, breaking the last high by creating this high right here. So we put the stop loss at the low and we were able to buy two. This time around, price did not get to 100.0 also, so we bought directly to the counter trend line. Remember that what the counter trend line is also a very important criteria for exits. So this was it. This was the counter trend line that made us exit prices. Okay, we can see that as soon as prices hit the counter trend line, prices rejected. So we took our profit after prices hit the counter trend line, and we were able to take our profit and let the prices go. Okay, so now for these two trades, how did we use trade management for these trades? Remember that what on this one we had prices make what a push, exhaustion right here, push, a lower high, violation of the structure right here. As soon as prices violated the structure, we saw prices go a little bit, then come back to catch an higher low right here, and now go back to hit our take profit. So as soon as prices came back here to break this high and create another higher high, we put our stop loss at the low right here instead of at this low point here where our stop loss initially was. We adjusted our stop loss to this point. So if market was to hit us out, it will hit us in less loss than when it was at this initial place. Since price has created an higher low and we took profit at what? At the 100, or we took profit at the counter trend line right here, which is also the same here. As soon as we entered our trade here, which was as a result of push, exhaustion, push, exhaustion, push, exhaustion. As soon as we saw a violation of this structure right here, we got in our trade right here, put our stop loss at the low. So we saw prices go up from here, make an higher low, and as soon as what market broke this high right here, as soon as market broke this high right here by creating a higher high, instead of our stop losses being here, we adjusted our stop loss to this point, which means if market has hit us out, we'll be out on smaller loss. But instead, prices went straight to our profits, hit the counter trend line, and we exited prices. Okay, so which is also the same thing we're going to be applying right here again. Okay, so this is a new trade opportunity for everybody to enter in this new week. Okay, so how are we going to enter prices? As soon as this structure is violated, push exhaustion, price is made a push to the reversal zone. As soon as the structure is violated, like I said, price can come here, create a double pressure, just like it did in the example that we talked about. But as soon as we see the buy, we are going to enter, put our stop loss at the low, and buy to the counter trend line. This is going to be a very solid trade for us. And this is how we enter our trades using the structure of prices. So structures are very important, and we enter using the structure of price. So as soon as prices gets to our take profit, okay, as soon as prices gets to our take profit, let's say this is the structure that prices used to get our take profit, push exhaustion, push exhaustion, push exhaustion, push up to our take profit. As soon as what we see a violation of the structure, we are going to sell, put our stop loss at the high. And remember that what overall we are bullish on this particular price. So what is the best thing is what? If overall we are bullish and if I'm selling, that means that what? I'm selling against the overall trend. So what will I do? I'll just take profit at 61.8 of this particular bullish movement. Okay, I'll put my Fibonacci from the low here, then to put it at the high, then take my profit at the 61.8. Okay, so like I said, if I'm sure of the direction of prices, I'll take my profit at the 100.0 or using a counter trend line. If I'm not sure of the direction of prices, I just take my profit at the 61.8. So there are going to be more examples coming up that I'm going to be sending out on YouTube. And if you want to learn more, you can join my academy, and I'll show you guys, understanding this, you are going to be profitable and you will see unbelievable results. I assure you, it's so simple how we trade using the knowledge of structure, and you can check out more of my videos to learn how to understand structures and how to trade structures. Thank you very much, guys, and stay abreast. Subscribe for more videos that I'm going to be sending in. Have a great day, guys.